This is the MTPredictor weekly market update for August 18th. All right, let's get right into it. Got a lot of ground to cover here, but hopefully some good stuff. This is the S&P futures contract, the weekly chart, and as I've been saying, you can go back to July that we're anticipating when we were in. If I put the Elliott wave intermediate on, wave 4, that we would potentially get the rally. We had the blue buyers candle telling us the buyers were now overcoming the sellers in this wave 4 support area, that we should get a rally into wave 5. Right, we did get that rally into wave 5, and a few weeks ago I said, we've basically 1700 level in the S&P futures was that first, or the beginning of that first target. If I continue with the waves, I'm just going to choose Elliott wave intermediate here. You can see we came right into the minimum wave 5 target, just above 1700 as we anticipated. And you can see, obviously, I think last week we pointed out we had the decision point sell signal. And if I put the analysis on that, the software knows that the target is the decision point here off of the wave 4 swing. That's typically after the 5-wave pattern up, you get a correction back to this wave 4 DP. Okay, you can see after wave 5 here, we began to correct. And we've gotten 2 red sellers candles that have come in the last 2 weeks, telling us that in fact sellers are overcoming buyers. And so at this point, the 100% initial risk line has been achieved. And it's possible to be in a risk-free trade if you wanted to bring your stop down to break even. Otherwise, we'll see how this progresses and if we can achieve the wave 4 decision point here. So again, you probably hear a lot about the market's in trouble, market's going to correct. But here's the here it is visually. Why we're anticipating it ahead of time. That's why these are leading indicators. We have them on the chart ahead of time. Doesn't mean that the market's going to play out as we anticipate. But what we do is, if we anticipate that this is going to be a resistance and we're going to sell off into the next support, if we're going to trade that, we're going to do it at a low control risk and a high reward. So the reward for this is 5.8 times greater than what you would initially risk. And if you're wrong, you're going to lose that 1R risk unit. If you're right, basically you're going to win 580% or 5.8 times your initial risk. That's the game. Right? So your analysis is not going to be right 100% of the time. Although, in the S&P over the last few years, it's been, pretty predictable. Again, if we want to go back and we review this over and over again, but this was the buy signal, the major buy signal at the March lows. But the reason that made it of interest is that not only did we have the decision point buy signal, which told us we had divergence down here in a support area, but we also had a 5-wave pattern down. Market came right into the minimum wave 5 target, and that's when the initial rally began. Again, it corrected back to the wave 4 DP, but once they took that level out, it told us that they were going to wipe out that whole 5-wave pattern down to the upside. We take a DP off of the top of wave 1 and we extend that out, and you can see will come into play later. But how did this rally unfold? Elliott wave tool tells us right into the minimum wave 5, so we had a 1, 2, 3, 4, 5 off of that major low into the minimum wave 5 target. And again, we anticipate, as the trade set up there, if I can get this on here, that we should correct back to the wave 4 DP. Okay, that was good for 4 times your initial risk. This one to the bottom here, just to the initial target, again about 3.6 times your initial risk. We had strength on our STF at the time, so you could actually trail that with a trailing stop, and then stopped out right about there for about 4.8 times your initial risk. So again, low risk, high reward. That's the game. Same thing here, and then again here, analyze this setup. we had a decision point, but the interesting thing about this DP again, if we just make this a little bigger, choose the LA wave intermediate, again, right into the minimum wave 5 decision point, good for about twice your initial risk there. This area here, we had another DP here. Let's just clear all this off for a second. We had another DP here with a 5-wave pattern up here. This one reached the typical wave 3, and you can see we had a DP, so we had divergence up here as well. This also corrected, but it didn't achieve the target, which would have been 8 times your initial risk. It didn't achieve that wave 3 target. So in this case, the analysis anticipating this target was wrong, but the key is you'll lose small. So we had, several big wins and a small loss. Although it did correct. So the fact that we were in a major resistance area, went wave 5 up, we did correct, just not to the level we anticipated it would. But here we are currently, and so again, all we're doing is we're putting the analysis on. We're ignoring all the talking heads and so forth. And just what is the chart telling us? Again, it's telling us just like the last few years in the S&P, when we come up to this level, we should anticipate a correction. Typically, again, it's been back to this wave 4 DP. And again, the software knows that that is the target there. If this area holds as support, if we achieve this level and it holds as support, we would anticipate the trend, which was up prior, should continue up. If it fails, then we anticipate this whole 5-wave pattern up here will get erased to the downside, and that 1200 target in the S&P might come into play. All right, so a lot of ifs there, but again, if you're going to put money on it, you take a small control risk with a large reward. That's how you make money on these things over time. If we want to look at, let's look at the Dow Mini here. Again, same situation. I'll kind of go through these a little quicker. The analysis is the same. The wave 5 up here, again anticipating potential correction back to the wave 4 DP. If I can get this on here. Okay, that would come in right around 14,350 level. Okay, here is the NQ. And again, we'll put the Elliott waves on here so you can see. The NQ is a minimum wave 5, just shy of typical wave 5 there. But again, you can see put the analysis on the setup there, the correction anticipated back to 2776 and change there. Now this one, there was a initial signal there. This signal won't hit until 3066.25. But again, same pattern, wave 5 looking for a correction back. So what I'm saying is basically all these markets, all the US stock market is in the same position. If we look at the Russell here, also 5 waves up right into the minimum wave 5 target there. Again, anticipating a correction in the Russell. That correction would be back to this wave 4 DP in that 922.80 area. All right, so again, it all comes down to taking a small control risk. So if you're right, okay, you can win in this case 5 times your initial risk. If you lose, you're going to lose small. All right, look at a couple of stocks here, kind of a tale of two cities. This is Apple. Apple went wave 5 up way back in September of 2012, and again we were anticipating a correction back to this wave 4 DP. It did that. It's kind of bobbled around there, had a difficult time getting back above 450 and then 500. It did close last week above 500 for the first time, so we'll see if the picture changes there. There was a high volume spike that came in here, and so we're going to have to see what forms this week. If we get a red seller's candle, if they fail to take or make new highs, and instead we get an inside red seller's candle, that may be telling us that professional sellers were coming in here, and we'll have to watch that. All right, but if we look at Google, right, let's look at the weekly chart here of Google. Kind of compare apples to apples. Google was just now, similar to the stock market, making its all highs in here, reached the typical wave 5 again. So we anticipate Google may be correcting back to the, in this case, right around 740. We'll call it 742 area. And you can see it's made some progress last week down to 856, 857 area. But again, this pattern, it's the same. You can see we had some nice buy signals, but once we went this 5-wave pattern up, the trend which was up may be turning and at least correcting back to this area or becoming a trend in the other direction. All right, so again, you don't know. Again, you look at your analysis. If you are going to trade your analysis, then you take a low risk, high reward trade. So if you lose small. If you win big. All right, so we looked at stocks. Let's look at the bonds on the weekly chart. So we had some nice, standard buy signals there in bonds. But where are we currently? We had a big drop off here. If we just choose the Elliott wave intermediate and say, okay, where are we here? We've reached the typical wave 3 target, and so we would anticipate we have some support here that the bond may rally. These are the 30-year treasuries. Futures may rally here. Let's project up wave 4. So I'm going to go up wave 4 using the tools and the software here. Just a click at 2 down to 3, and this projects the wave 4 target there. All right, if we do rally into wave 4 as anticipated, then we can project wave 5 down. Let's just look at the I want to take a look at the monthly chart here, and you can see going back to 1999 here, we've had the uptrend in bonds. Let's just draw a couple of, oops, that's not what I want. I want the trend line. Let's delete that and try again. Trend line. Okay, so we've got this major trend line from the late 90s there into early 2000 when we've really been getting that rally there, and then we can look at, if I can get this one on here, this here. So if we do get a bit of a rally on the weekly chart into wave 4 and then head wave 5 down, might coincide with this trend line here, and then we'll watch these and see if they're breaking down below that, or if this Fed steps the foot on the asset purchasing and quantitative easing pedal. Again, all that stuff's going to come into play there and try to recontrol this. But we've seen obviously corrections in the bonds before, and we'll see how this one plays out. If you want to look at as well, one of the things I want to look at was the VIX, and this is the VXX, the ETF on the VIX and the S&P. And you can see this and the VIX is kind of inversely correlated with the market. So the spike there back in you can see back in February of 2009, panic, and then as we come down to these levels, it's complacency. Everything is all right. Stock market's at all-time highs. So really, this is the area where you want to be buying the stock market, and this would be the area that you'd want to be selling the stock market. And in fact, we had this, if I pull this back here, this TS2 we know is an ABC correction in wave 4, looking for wave 5 down there. So if we look at the pattern here, you can see the 1, 2, 3, 4, 5. So the VXX has a potential bottom in, and correlating with the highs in the stock market, a bottom in the VXX. Anticipate we may get more volatility, increase, a panic, if you will, as opposed to the complacency that we were in. In fact, we can just put the analysis on the setup there. The initial target in the wave 5 already been hit. And so again, we'd anticipate a correction back to this wave 4 DP here on the weekly. Alright, so we'll see how this plays out. Again, this is the area that you don't want to be buying the stock market down here. You want to be selling it. Alright, and this could flounder around for weeks, months. We don't know, but it's in the area where the only real place it's gonna have to go is spike to the upside at some point. All right, so let's look at the dollar index here. So the dollar's was selling off there. This was our weekly buy. Kind of hit these levels, and then I'm just going to take a decision point off at this level, and you can see that's exactly where we hit in the dollar before it began to sell off, which means our euro US dollar should be rising on the weekly chart. And again, we had the 5-wave pattern down here in the euro. Again, we anticipated that correction. Not that it would play out, but we anticipated that it's what it typically does. It did. And then this sell signal came in. It was just a standard trade set up just because we had a nice little ABC corrective move there. And you can see what the target is for that. So we'll see if the dollar, when the dollar finds some support, we can kind of see this is kind of bouncing around here. We do have a little head and shoulders pattern there, if you notice that, with a neckline. Oops, kind of missed that. Here. And you can see that neckline hasn't been broken yet. But we'll watch this. If this does roll over again and the dollar moves higher, and we'll watch this neckline. If that breaks down, then we may see eventually see that target. All right, and then let's take a look at gold and silver. We'll finish with these. This is silver, and again, here's the kind of the bigger picture here. We had the 5-wave pattern up in silver. We anticipate again a correction back to the wave 4 DP. That's where we hit, and we're rallying off that level. If we want to look a little closer now and see the current pattern, again we went wave 3 down on the weekly chart here, and expecting a potential rally into wave 4. So let's go up wave 4 here. Okay, and there's the wave 4. So we've made a lot of progress. That comes in right around the 24, call it around 2450, 2440, 2450 level, all the way up to 28 and change. So the we had the commitment of traders report came out, and it looked like the commercials were net long. The speculators still short from around this $25 level, and you can see the reason when you draw the triangle here. You see that was the break of the base of the triangle there, the bottom trend line there. When that broke down, you had a lot of folks speculating or getting net short there, and so if we rally into that area, is it possible that we could see some type of short squeeze? Definitely possible. So we'll watch this level, and take this off here for a second. If they rally above this level, we've got a couple of swings right here. Let's just go to the top of wave 1 here and take a DP off of this one. So just above that $35 level would be your next, you'll have another one right here off the wave 2. Okay, so that right around that $35, $36 level. If this does wave 4 does hold, as a lot of times, once they break this level, it gets a retest and then falls off. So we could rally here into wave 4, into the bottom of this trend line, and then we can project wave 5 down. We may get another leg down and test the lows. All right, so we'll see how this this plays out. Yes, the bottom certainly could be in. There's a lot of other factors going on that tell us that bottom, could potentially be in, and they might just take these levels out in case, we've got additional levels here of resistance and targets and so forth. Or they could just be retesting, coming into wave 4, retesting the bottom of that trend line, and then rolling over again into what would be our weekly wave 5 there. And then gold. All right, here is the weekly chart of gold. And I'm going to look at this swing low here, and I'm going to check the Elliott wave, the major pattern here, and you can see like a 1, 2, 3 down. This rally may be a rally into wave 4, so let's project the wave 4 up here from the top of wave 2 down to 3, and this projected up bar. So just above 1400 in the gold here. We would anticipate the beginning of a resistance level in what could be wave 4, and then we'll watch. I mean, it goes all the way up to 1550, 1560 level, but we'll watch if we get into that area. Watch how gold reacts if this area again holds as resistance, and then we can project wave 5 down. We may again get another run down to test those lows before we kind of find a bottom there. Or, like I said, the bottom may be in. They may take these levels out and just, continue upward. Just something interesting. We'll take a look at the monthly chart here, and you can see the wave 5 target, which was even surpassed. I mean, they just took these wave 5 targets out to the upside, big time on that spike, and you can see the high volume spike that came in up here. That high volume, unusual activity, telling us that potentially professional sellers were coming in here. But again, here's the wave 4 DP. Now this on the monthly chart would put gold down around $500 an ounce, but because this thing just rallied and blew away these wave 5 targets, even the maximum wave 5 target there, this correction may never reach this level. I mean, it could, obviously. If you're going to trade that, then you obviously use a low risk. It doesn't matter, again, whatever you get into, you're going to use some type of low risk, high reward trade scenario. But I don't anticipate that this will be able to correct all the way back to the wave 4 DP. It could. It's the tendency, but because it overshot so much, it may be the pullback may be a lot shallower here. So anyway, just interesting. We'll see how these play out. Hope it was helpful. Again, a few reports, things to look out for this week. We've got the FOMC minutes, 2 o'clock Eastern on Wednesday. That should be a potential market mover. And earlier that morning, we'll have the existing home sales. Thursday's jobless claims, and then new home sales on Friday. All could be market movers. Yes, we did have another confirmed Hindenburg omen for those that follow that a few days ago, the one that was confirmed again anyway. And so that's out there, and that basically lets us know that the market internals are unhealthy up here, and when we see those, that we typically do see corrections out of the last 25 Hindenburg omens. I think there's only 2 that have failed to produce a correction of at least 2 to 5%, and about 25% of the time I think we see a market crash of 15 to 20% or greater. So it's just something, another little piece of the puzzle there. And that's it. We'll wrap up here. We'll do it again next week and see how things progress. So have a good rest of your trading week, and we'll see you back next Sunday night.